Today I'm going to share with you just very quick and briefly how you can go about growing a small account trading the E-mini S&P 500. Okay, now it doesn't matter if you're trading the micros or the standard E-minis. You can do the same. Okay, the strategy is very simple. It all surrounds supply and demand zones. All right, that's what I trade 98% of the time. It's looking for quality setups, high probability setups within the market. I primarily trade the indices like the NASDAQ and the E-mini S&P 500, but from time to time I also will trade gold. Now, what you need to understand, what you need to master is going to be market structure. It is a very important concept because you've got to determine the overall direction in which way the market is moving, trading to the upside or moving to the downside. If you see a bullish trend where the market is making higher highs and higher lows as it is continuously shifting to the upside, you only want to trade high probability supply and demand zones, specifically demand zones when we are looking at a bullish market moving to the upside. Now, how do we identify that? Look, we have a high here, a higher low, higher highs, moving to the upside, making these higher highs and higher lows. Now, if we're channeling to the upside, the only thing you should be paying close attention to and looking for setups on, again, are demand zones, not supply. Supply is where the market is trending to the downside and we're breaking structure lower. So for example, I'm going to share with you right here. We can see the market is channeling to the upside right here. It's making higher highs, higher lows, higher highs, higher lows. And then we have a high right here. And let's say the market pulls back or retraces where we start to get a bearish directional shift back to the downside where we've got lows, lower highs, lows, lower highs, and lower lows, right? Yes, the market is looking like as if it is shifting to the downside now. So we go from a bullish to a bearish direction. But let's say we start to make move in the opposite direction again, meaning we're making highs, higher lows. We break higher, breaking above this area of structure right here, right? And we also take out some structure to the left-hand side. Now, this is a major high and this is a major low. But that's fine because if the market starts to shift back to the upside, as you can see right here, we will be looking for opportunities to trade going back to the upside with the market. Preferably, what I tell people most times is that if you have a hard time trading the in-between right here, then wait for the market to basically break either a major area structure, meaning a major high or a major low. Again, this is the E-mini S&P 500. I preferably trade based on or using range bar charts. Some of you may trade time, but that is fine. You can do the same. But we always want to start with a bigger outlook, meaning a broader perspective, looking at a higher base chart. We've got a major high and a major low. The market starts to shift back to the upside, so we're starting to form this bullish trend channel to the upside right here. Now, when the market breaks above, say, for example, this high here, then we can look for a pullback to a key area of, say, in specific demand. There's a demand zone resting right here. It's a high probability setup, and what makes it or marks it a high probability setup is that we have a imbalance or gap resting back at this zone. Okay, so what I'll do is I'll mark up this zone right here. I'll draw it out right here. Okay, how do we mark the zone? It goes from the bottom end of the bearish candle to the to the top end right here of both the bearish and the bullish candle right there. Now there's a gap on this candle right here from right here to back down here to the zone, a very small gap. That's what makes the difference of a trade being or a zone being high probability versus low probability. Again, we got a directional market shift, high, higher, low, breaking structure back to the upside, breaking above this high and this high. So now we're looking bullish back to the upside. Make another high, higher low, make a new high here. There is a demand area resting back here. We just broke structure above these highs as well as we continue breaking more structure back to the upside. This is a valid demand zone. I would then look for retracement back to this zone right here, mark it up on my higher base chart. Everything starts with the higher chart, okay? For me, range bar charts. Maybe for you, it's a time-based chart. For some, it could be tick or volume charts as well. Okay, so excuse me about that. But yes, as the market retraces back to the zone, what we do then is just scale down to a lower chart. You have to figure out what charts you're using. Some of you may be trading and using like a 1 hour chart and breaking down to a 5-minute chart. For me, when I'm trading the E-mini S&P 500, I'm using the 60 range chart as my higher basis and then a 12 range bar chart as my lower basis, meaning my entry chart. So I will scale down to my lower entry chart, which is my 12 range chart, to look for an opportunity to trade. Going long, what do I look for at that point? Once the market retraces back to this zone right here, okay, to the demand zone, I'll scale down to or move down to a lower 12 range chart and look for a high probability demand setup to where the market starts to move back in the direction with the higher range chart. Why? Because the market shifted. We had a shift in the market right here to where we went from bearish back to bullish to the upside, and eventually we broke above that major area, that major high right there. This is the valid demand zone. Go ahead and mark it up on your higher base chart. When the market shifts and we're back bullish, trending to the upside on your higher base chart, then go ahead and mark up a valid demand zone, in this case here, because we're trending back bullish. Mark it up on the higher base chart. Wait for the market to retrace back to on a lower base chart, and then look for a demand setup, meaning a demand opportunity where the market starts to form bullish back to the upside and a pullback to a demand zone on your lower base chart. The strategy is very simple, guys. Very, very, very simple. As I'm showing you here, right here on this chart. Now, let's say, for example, the market is moving to the upside continuously. We got a very bullish trend, direction in the market. The market continues making highs, higher lows, and higher highs. Okay, so let's say we have a reversal in the market. What does that look like? Basically, that's where we have a high, and then the market makes, shifts to the downside where it's starting to break structure lower. This right here could be, for example, a shoulder, a head pattern, and then maybe a shoulder pattern right here, so in this area here. But we get where we have a low, lower, high situation coming to the downside, and the market starts to reverse coming lower. Now, in that type of pattern, when the market starts to break structure back to the downside, this right here could be a valid supply area that we could wait for the market to retrace back to this area right here and look for an opportunity to go short. All right, so then the market, it continues moving to the upside. We break this major high right there. It creates a structure break or a new high right here. It pulls back, as you can see here. Then we get another break of structure right here to the upside. Yes, this could be a valid demand zone to trade from. Same thing. We mark up the higher base zone off the higher chart first, and then just move down to a lower base chart, whether that may be 40, for me it's a 12 range. And then I'm looking for a demand setup once it taps the higher base chart to look for an opportunity to go long. Now, if we have a reversal in the market where we have like a shoulder, a head, and then a shoulder pattern like right here, you can see the market makes a low, okay? Then it pulls back and we break below this area of structure right here. And then it also breaks below this shoulder, the low of this shoulder right here that was made to the left-hand side of the chart. Then I would say definitely now we're looking bearish back to the downside. So we would look for an opportunity to trade off a supply zone going short. Low, lower, high, coming to the downside, breaking structure here, and we will look for an opportunity for where the market creates a supply area that we could trade off of. It continues pushing lower right here. Yes, this would be a valid supply zone if the market had retraced back to it, as well as this area right here. So both of these will be supply areas if the market had pulled back to zones right here, okay? Both of these are high probability as well because we have a gap that's attached back at the zone on this candle right here and right here on this candle right here. But the market continue pushing lower, make it a new low, okay? So we have a low here. We have a low here, pulls back, a lower high, and then it breaks more structure right here. But look what it does right here. It comes right here, and this is a valid supply zone to trade off of. High probability because of the imbalance attached to that zone there. Again, mark the zone up on the higher chart. Wait for the retracement to the zone, scale down to whatever your lower chart is to look for an opportunity for a supply setup where the market is creating, an area of supply to trade from in the same direction and moving with the overall direction of the higher base chart. In this case here, we're moving lower, so you trade it going back to the downside. This strategy is what I cover every single day on the trading floor of our Discord channel. So if you're interested in joining the Discord, the link is down in the description portion of the video. It's free of charge to join. But I also break down my trade setups. You'll see me post over on the Discord my actual trades using the same specific strategy when I'm trading the E-mini S&P 500, the NASDAQ futures. I'll post my entries over on the trading floor. But then what I'll do is I'll break down the trades. There's so many videos of this covering this for the elite and our ultra elite members who are part of that community. And if you choose to and want to become part of that community where you receive a breakdown of an understanding of the basis of how I trade using this same scalping strategy each and every day, you may want to become an elite or an ultra elite supporter. How do you do so? There's a link down in the description portion of the video. That's where I go into detail about the strategy as a whole. You'll see me walk through setup after setup after setup, the same specific strategy and something that you can use in your own personal trading. But I highly recommend back testing it for yourself. Back testing and forward testing. It's very inexpensive. Again, the link is down in the description portion of the video. It's titled Elite and Elite or Ultra Elite Supporter. Click that link. Give it about 2 seconds. You'll see the tiers pop up. This is all through the YouTube membership program. And you should choose either the Elite or the Ultra Elite tier if you want to become a member. Why? Because that's where you're going to understand the basis of the trades that I take. That's where you're going to receive the video playlist and a great video surrounding market structure for all those that are struggling with that concept. And that's for those who want to become an Elite member. It's only $6.99 a month. That's it, guys. I'm talking about pennies on the dollar a day. If you break that down like over a 30-day period, that's like 23, 24 cents a day. That's all it is. Okay, very inexpensive, but you can learn a lot of value by watching that video content if you choose to become a member of that private community of Elite and Ultra Elite supporters. For all those who are, I definitely and greatly appreciate your support and efforts of supporting the channel, because that's what you're basically doing, is supporting the channel as a whole. But thank you for doing so. But again, if you're interested, the link is down below. And if you choose to become an Ultra Elite supporter or member, what you receive is just everything I discussed. All the trade breakdown videos, the video playlist, and my market structure video to include my live recorded trading sessions that I post, the videos, okay? Now, again, that link is down below. If you have not already taken the time to become a subscriber to the channel, please do so by clicking that sub button down below. Make sure to turn your post notifications on so you do not miss any of the uploaded content across the channel here. I greatly appreciate each and every one of you spending time watching today's video. And yeah, have a great rest of your weekend. Take care.